Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action in today's session, which was a step backwards. Not what we wanted to see today in this early rally, Ed, but we did say the coast wasn't quite clear yet.
That's absolutely true, and we'll talk about that some more. There were a few stocks that did okay, but even they had a little bit of an issue as the day wore on. Ford, Tempur Sealy, and Arista Networks are definitely stocks to at least watch, but maybe not buy right now.
All right, well, we'll check those out. First, let's analyze the action in the major indexes today. So here's the NASDAQ composite finishing the day down 1.7%. So even further down than this 1.4% loss the chart is showing. We also had the S&P 500 down about 0.7%. Small caps getting hit pretty hard today, down about 2%. The Dow, though, was about flat for the day. So was able to manage to avoid this carnage that we saw elsewhere, Ed.
Yeah, so the Dow is all right, but definitely a lot of growth names, especially the higher octane names, whether it's Tesla or some of the high priced chip or software names, they sold off today. And, look at the NASDAQ, you sort of see if you bought on Tuesday, say, basically we closed ultimately basically at the low of Tuesday, the gap up. And so while it was a nice gap up, if you bought on that day, there's a good chance that you're down. Now, obviously it's individual stocks that you might have bought, but that just shows you sort of like, it's just something to watch for. I mean, we had 3 nice steps forward and 1 step back now. And we've been saying, as we've been looking for a follow through, some confirmation that this rally attempt is going to have real strength. And maybe we'll get it tomorrow, maybe we'll get it next week, but we also could fall back and test and undercut the lows we had last week.
That's right. So we got to be flexible. But one thing that we do know is that the NASDAQ did close back below its 21-day line today. And that was a level that we really wanted to see the NASDAQ hold. We didn't get that today, but like you said, Ed, we need to be open to all of the various scenarios that could happen from here.
That's right.
So let's also check in on the S&P 500 here. So once again, down about 0.7% for the day. So I don't think quite coming down to its 21-day line, but like you said, so it was really the software chips, those high beta growth stocks that got hit particularly hard today, in addition to small caps. So just when we thought that the Russell might get back above its 200-day line, got slammed down again today.
Yeah, and that's a reflection of the market breadth. Yes, we had some, advancers beating decliners for a few days, but this has generally been the trend. There have been more losers than winners, and the Russell is basically a proxy for that. And that's what we've been seeing for several weeks now, and even before all this stuff about the Omicron variant. So wanted to see that strength, but it's like this one is more like 20 steps down, 3 steps up, and 1 step back. Not super encouraging in that regard. Definitely, we want to see that show strength even when we get a rally going.
Right. And now let's take a look at growth stocks specifically through the lens of the IBD 50 ETF FFTY, down 2.6% today. So a similar story here, trying to get back above the 200-day line, but a downside reversal here, Ed. So continued weakness with exceptions here and there in the growth stock area.
Yeah. And so while Apple and Google and Microsoft are either powering to new highs or at least holding up, masking the weakness, when you really look at growth stocks, there was some rebound, but put it in the context of some really heavy selling in the last several weeks.
Yeah. And I know, Ed, that's what you've been cautioning in this early rally. Yes, we may be seeing buying opportunities out there, but some of these stocks that say are getting back above their 50-day lines, maybe it's some of those enterprise software stocks out there that are holding up better than the broader software sector, as we can see here with IGV. Be careful about tiptoeing into those stocks, because you could imagine if the market starts getting hit, those could see substantial hits as well.
Yeah, and that's why I like to. If you are going to tiptoe into some stocks, maybe buy some stocks. I mean, some of the stocks we're looking at are, might be in there, but there's other names like the Googles and others, and we've looked at Google a bunch, so I hadn't looked at it. But stocks that aren't likely to plunge if the market pull back. I mean, they'll fall if the market goes down, but something that it's a little bit easier for you to back away from than a stock, because some of these stocks were falling 4, 5, 6, 8% on a day when, the Dow was flat, and these growth names got whacked pretty hard.
You're absolutely right. There's a reason why we've been focusing on potential entries for long-term leaders so much this week. So we'll have to see if they can continue to hold up better than the rest of the pack. But let's talk about Ford, ticker F here, coming down to its 21-day line in recent sessions, but finding support there. So really, all in all, Ed, this is an automaker that is holding nice and tight at highs after a pretty explosive move launched by the last earnings report.
Yeah, and so that's really great to see. It sort of runs up 20%, but does it pull back? Even in a market correction? Not really. It came down to the 21-day line, but sort of held up well, and that relative strength line right there at highs. I mean, that's just a positive sign. Yeah, you could be starting to think about early entries if it broke above certain levels in the next few days, things, but it's also, maybe you just want to watch. This is something for the watch list. The RS line is high. It's holding up well. And when we do get a follow through, this is one that you could imagine would do well and potentially could be a leader. Doesn't mean it will be, but these are the kind of stocks, high RS names holding up in a tough market that you want to be paying attention to right now.
Yeah, that's a great point there. There's more than one automaker out there that we could focus on. And so Ford definitely worthy of attention here, Ed.
That's right.
And also Tempur Sealy, TPX, action here worth noting, though it didn't close too great. The decline of about 2% came in lighter than average volume, it looks like. So setting up not only this potential double bottom here as it tries to hold the 50-day line, but a potential declining tops trend line as well.
Yeah, you could probably buy it if a declining trend line, or just buy it above if it got back above Tuesday's high. I mean, Tuesday's move looked like, kind of a situation where you could have taken an early entry. Well, it's backed off. I mean, it's backed off from that point. But maybe if it shows strength again, that would be something again. And one of the positives, if it shows strength again, that's probably going to be because the market's showing strength again. That's one reason to wait for that little intraday high. If you can get above Tuesday's high, maybe the market is falling through. Doesn't mean it is, but there's a decent chance there. I will note the RS line is right, considerably off the highs. This did not hold tight like Ford did. Anything that consolidated like that, it definitely pulled back, but it's done that in the past and then gone on runs. It's just one thing is that just something to watch. We'll see. Maybe it won't pan out, but this is the time when you're going to be putting a lot of things on watch lists, and some of them end up doing great, and some of them you just discard because they don't work out well.
That's right. To point out some of the flaws here. I mean, there's no perfect stock, right? But yeah, that relative strength line is definitely something worth noting, in addition to the group strength, or weakness rather, with the household office furniture group at 183 out of the 197 industry groups that IBD tracks. But, it's had a big run since the coronavirus crash and was able to hold support at that 40-week line. So that's not too shabby. And what about ANET, Ed? We have this computer networking giant with an up week after a couple of weeks of declines. But I think what stands out to me on not only this weekly chart, we can go over to the daily chart as well, but just how well that this stock has held up since that very strong move that it had on earnings in early November.
Yeah, this is even more than Ford, which had that nice run, but this one gapped up, and it's held up so well, found support around the 21-day line, not, it got, I guess, sort of vaguely close to the 10-week line at one point, but this is, it even rose today. It may have been on, Sienna, which is in a different group, not really a rival, but, vaguely in that whole telecom equipment kind of thing. Maybe that helped give it a lift because Sienna had a really strong day on earnings, but it sort of moved above this trend line, rebounding from the 21-day line on Tuesday. If you wanted to take an entry there, you could have done so. It sort of feels like maybe it's getting a little extended. I mean, especially in this kind of market, to be buying here. I mean, it may not be in a better market. You could say, oh, you could still buy it. But if at the end of this week, it should have a flat base, at least on a weekly chart. So that would provide a new entry point as well. So this one is definitely one to watch. Again, the RS line looks fantastic. Great action in that regard. The fact that it's a growth stock that led today, I mean, that there really weren't many. This is fairly high octane. I mean, it's not as whippy as some others, but it's had some pretty big moves. And for it to be up today like that is pretty impressive.
Yeah, definitely showing relative strength today. And Ed, I mean, with all of these potential watch list or even actionable stocks that are worth nibbling at this point. I mean, even when market conditions have been great this year, it's still been a tricky environment for active investors, requiring you to be pretty nimble, pretty laser focused with your entries and looking at key levels for your stops. So if we could see continued market volatility from here, what would you say to investors out there who are making new buys at this time?
Yeah, I mean, I think that if you're going to make new buys, you have a stop ready and like know where you're going to get out. It doesn't have to be all or nothing, but you'd want to be ready to scale out. And especially if you're in more of the bigger movers. And I mean, those are a lot of fun because boy, look, it's up 10% today. But you can have those days when it's down 5, 15%, and the market's just having a bad day, not a catastrophic day. So be ready to pull out. I mean, this is a pivotal time. The market could go on a nice run, but if things go bad, we could go right back to those lows and you can't be caught out. So you have to stay engaged and you have to be ready to act. And just know that if you're playing these odds kind of thing, you got to be willing to step back quickly as well.
Yeah, that's right. I mean, hey, no one likes to be wrong. Who likes to be wrong? But it's better to be wrong small than to be wrong big and cause catastrophic destruction in your portfolio. There may be times where a stock will come back, and you may feel like you're regretting selling when you did. But trust me, there will be other times where you will be very glad that you got out when you did. So it's better overall for the long run to have those loss cutting strategies.
Yeah, absolutely.
All right. Thank you everyone for tuning in. We will be back tomorrow morning with more on IBD Live, where we'll be joined by special guest Matt Caruso of Caruso Insights. Looking forward to welcoming him back on the show, see how he's approaching current conditions and if he's nibbling on any new buys. So we'll hear from him in the morning. Please join us at investors.com/IBD Live. We'll see everyone there, and we'll see you all tomorrow as well, right back here after the close.